following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis, from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. I received a phone call yesterday, and the person was absolutely adamant that I was crazy to think about anything related to astrology. And I said I appreciated his opinion, and I would certainly take that under advisement. However, how I got interested in this was twofold. One was a story about Mary Rivers at Drexel when she did all that silver stuff. Then I put it on hold from 1982 through 1986 while I was trading on the floor of the exchange and then also for Commodity Corporation. But in 1986, Dr. Ruth Miller contacted me and said she had found things in astrology that related to Fibonacci and that I should take a look at it, which I did. And so we started to look at it. And the turning point for me was that we had all the data from Jim Twentyman that Jim and I had accumulated over, well, it's over 50 years now, but it was 30 years at that time. And we basically could go back and see all the key turning points in the market. Then all we had to do was to take those turning points and then go into the computer and see what was happening astrologically at that time, if there was going to be something there. And folks, I don't want to argue about this. I don't want to talk about it, and it's certainly not anywhere near 100%, but it's far, far better than 60%, and that's really the kind of edge that you're looking for. But if the key for me, the real turning point was, one, looking at the Bradley model, the fact that it does have some really good capabilities of looking at market turns, but it doesn't work all the time. But the major ones, folks, the bottom in 1906, the bottom in 22, the big one, the really big bottom was in 1974. We had a double bottom in October, and then we had another bottom in December. Both of those bottoms were accompanied by multiple conjunctions and oppositions of the major planets, with Mercury going retrograde during some of those times. It was just as clear as a bell. And then if you look at 1982, there was another, massive conjunctions and opposition. The high in 1987, on the exact day, August 5th, harmonic convergence, August 25th, I'm sorry, harmonic convergence. We had 5 planets in the sign of Leo, all at 0 degrees. And then, of course, the big daddy rabbit of them all was in March the 5th of 2009, when we had all 12 planets in one house at 0 degrees. That was the really big one. However, there are times when, the astrology didn't really help very much. September 3rd, 1929, when the Dow topped at 383, the only thing that we had there was a new moon and a very small aspect that absolutely turned the market. I've always been why that happened. I met a man 10 years ago named William Ehrman. He writes a book about Ehrmanometry. Bill is in his late 80s now. He's not in the best of health, but he's the best I've seen for timing. Norm Winsky, from what we've seen on a short-term basis here with the last 5 calls that he's made, has been nothing short of fantastic. But Bill Ehrman has shown me mathematically how these things fit together. And when he comes up with what he has them ranked anywhere from level 7 through level 10. When he has them ranked at 9 or 10, boy, you better pay really close attention, because what he's looking at the mathematical correlations between all the highs and lows in the past, going back into the late 1890s to the present day, because when you have multiple hits coming together from areas, this means a great deal. One of my students who's extremely successful, and I mean that in the fondest stretch of the word, because he really is successful, and not only at trading but at everything else, approached me about 4 years ago and asked me about the timing, and I said, frankly, I can do a little bit, but the only person I've seen that's really good that makes any sense to me is Bill Ehrman. And so I put him in contact with him, and they became friends, and done some really big things. The reason why I'm leading up to this is that I received a email from Mr. Ehrman yesterday afternoon, and he said that this is it, April the 15th. And he said the market should start down from this level. Whether that means too much or not, I don't know. But remember, we also have Norm Winsky and a major sell signal. The last time Norm gave a major sell signal for us was on January 3rd. The market went straight down from January 3rd to, January or February 8th. And that's when, we had the big ABCD pattern and turn. Just what I'm saying is I can see where we are with the New York Stock Exchange Index right at the 61% retracement of the move. But we have all these mathematical ratios coming together, is what's going on. And again, we also, they're reminding me here that Bill Meridian was also pointing towards April the 15th. So we have Norm Winsky, we have William Ehrman, and we're also going to have Bill Koval on today from WD Analytics, who also is looking for, something really important to happen here. But my feeling is you got to pay attention with what Norm Winsky is talking about, and also what Bill Ehrman is talking about. Norman has been he hasn't missed. He's been spot on these, so we got to watch it very, very closely in here. I believe if we get above 2091 or something like that in the S&P, there's probably, they might go up forever. I don't know, but pay attention to it as we go through the day. I posted a chart in here today of crude oil. Basically, what you're looking at here is we made that slightly higher high, which is a potential double top. And then we had the 786 retracement back, but we're completing the first ABCD pattern, since, early April. So this is, if you like ABCD pattern, some really strong support down here in the crude oil at, 40.40. Now that's down a good $2 a barrel from the high, but that's what they're saying here from the cheap seats here in Tucson, Arizona. So keep an eye on the crude today at that 40.40 level. We'll see if that's going to happen. Now, over the last several days, the stock market has been going up and oil has been going down. So the people on the financial press have to pick on something else. And so what they've done is they've gone ahead and started to pick on the U.S. dollar's strength or weakness. They have to have something to talk about, that fits in with what they're saying. And that's really all it's all about, folks. And that's why pattern recognition, is pretty good. So, okay, next we're going to be talking about gold next. 877-927-6648.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no questions asked money back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and now we're talking about gold. I've posted into Tiger TV the long-term chart going over the last, well, it's not long-term, the last 8 or 9 months. It's a weekly chart. So as you can see, this is the gold and silver index made a perfect 61% retracement from the high of 2014. So, and it hit it right on the money. I think it went 4 cents above the exact number, and then it's backed off well over 8% over these last few days while we've had this correction that we have going on in the gold market. I've had several requests or questions about whether I still think that gold could get to 1190, and my answer to that is yes. I mean, it's closer to it than it is when it was trading up at 1270 back on March 18th. So we are getting closer to that level. This is a Friday in a down week, so I'd be really surprised to see if the gold is going to have a big run up to today, but anything is certainly possible. But I'm still holding out for the possibility for gold to make that 1190 level. If you recall, we talked a little bit about the GLD, and if you'll take a look at the chart on the GLD, you'll notice that we also have the potential of the 20-man line to come down here in around 113.76. That would be equivalent to the gold getting down somewhere between 1190 and 1170. Those are the two levels that we're watching. Gold has been following very nicely as far as the ABCD structure that we look at. I mean, it's we just saw what's happening with the oil market, and if we take a look at the gold market, you'll see the exact same thing occurring on a short-term basis. We'll pull this up and take a look at it because I like to watch gold on a 15-minute basis so you can see some of the swings that are there. And if you watch it, you'll notice that we did complete a 3-drive pattern last night. And then also we've had a small ABCD correction on the upside today. And if the gold's going to turn, it really needs to get above the 1234 level. We're up about $5 today, but it's going to have to really start running if it's going to make any headway at all. So my advice or idea here is that you want to wait a little bit, because we topped up here at 1264 on the 12th, so we should get some more downward movement. And the bigger is from the 1286 to that 1260 level, take us down to about the 1180 level. So I would say, be patient here in the gold, because it's still got a chance for some more movement to the downside. Longer term, I really think gold has got a chance, to really do something, to do something really good. But we have to wait and see what's going to happen, and then we'll go from that level. Anyway, let's move on here. And we're going to talk a little bit about silver, because silver is acting, on its own, which it should, because it's a different metal, even though it's a what do you call it? Oh shucks, hold on here one second. Even though it is a precious metal, it still is a lot of industrial metal also. So we'll take a look at the gold silver market here, and we'll look at this, because we've completed the big ABCD up here in the silver. Just give me 1 second here to get this up, and we'll take a look at it, and we'll see the ABCD pattern that formed. Now that made a 3-drive to a bottom pattern, a 3-drive to a top pattern, hit it spot on at 1630 and change, and we backed off just a little bit, 30-40 cents from that level. So we'll keep watch this. But if we get much above the 1650 level, this thing could be really moving pretty good to the upside. I'm not a buyer of gold in here. The question has just been posed to me. I would prefer, if you're going to buy it, last night it was the time to do it, was at that 1230 per ounce level. And remember, that was down $34 from the high, $35 from the high we made back at 1265. And that's, the harmonic number in gold is 34. So if there's going to be any good rally, it should be at least $17 from here. And that would take gold up to the, 1247 level. So there's a possibility that could happen. But given the fact that we're down on the week, I would wait to see what happens, early in the week, because the number that I'm looking at is still between that 1190 and 1170 area. That would be, and that would make a little sense to me. Whatever makes sense. But you had a nice breakout, and then everybody got really bullish when those stocks for the miners and stuff went absolutely ballistic when they found the cure for cancer, and now they're realizing that there's some trials to go through. So one really good pullback, shaking out some of those folks, might be a good way to wait and see what's happened. That's what I'm looking at as far as the gold and silver. I still think they've got a really good chance here for something really, really big to happen, and I'm waiting for one more chance to see the larger ABCD structure to form, and a 382 retracement of this whole move. And that's what we saw when we were looking at that GLD. And there'll also be a 20-minute line at that point too. So there's a lot of things to tell us that that's what we're looking at. I've had some people ask about the 20-minute lines that we had in sugar and also in coffee. I don't trade, both of those worked very, very nicely, as did the one in copper. Copper rallied well over 10 cents a pound right off of those lines, which were 618 in the coffee, sugar, and the copper. All of them rallied strongly off of those numbers, and they only work part of the time. That's the key. There's nothing 100% in any of these things, so keep a keep a watchful eye on those things. The currencies are moving pretty rapidly here. We've had a pretty good move in the Canadian dollar over the past couple of days. It bottomed and made a beautiful three drive to a bottom pattern that we had looked at several times. In fact, we'll take a look at it now because we're in the midst of another part of this rally that we have right now. So give me 1 second and we'll take a look at it. That we've got all the way up to 29 and change so far in this. So that's a 200-point rally, off of the bottom, and that really fulfills because the three drive should have really good symmetry. And as you can see on this chart here, there's 2 3 drive patterns. There was one that happened during March through April, and then if you look at the 3 drive pattern from May of last year, you can see how the market jabs down once, jabs down twice, and then jabs down the third time, and then it takes off. But if you'll notice, after the big run up, it took about 2 weeks to pull back to a 61% retracement, and then the really big move started, and then you had the 382 retracement that occurred in October, and then away it went. So 877-927-6648.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're hoping to have Bill Koval on from WD Analytics. We're having a little bit of a technical problem right now, but that's not surprising when you're dealing with technical stuff, which in fact we're dealing with right now. Stocks are opening a little bit. They're rallied back. They're about unchanged on the day, so we'll watch what's going on. As far as the bonds and notes are concerned, we hit those major fib points, and they've sold off a great deal from that level. We rallied back about one handle in the bonds. Notes are not rallying too much, but we'll notice whether the rest of these are going to go. The silver and gold, now they're into options expiration now into silver. I was alerted to us by our good friend Dr. Scott out of Tampa, and that always has an effect, especially with silver, because of the fact that so many of these large banks like JP Morgan and stuff take the other sides of some of these things, and it makes it very, very interesting to see if they move the markets very much. But like I mentioned, I believe we're still heading down towards that 1190 level in the gold market, and then we'll take a look at it there. But because we hit that 61% retracement on the XAU and all of the gold mining stocks, we looked at, I think we looked at American, no, we didn't look at American Barrick, I don't believe, because that's another one that gave us a really strong opinion that maybe this was a time to, here we go. Just give me 1 second here. I've got to make it just a little bit larger here, and we'll take a look at American Barrick, and then we'll see where we are right here, and then we'll go. Oh, there we go. Now we got our good friend Bill Koval of WD Analytics on the line. Dollar Bill, how are you today?
Yeah, good, Larry. Coming through okay?
Oh, everything's good. Yeah, everything is fine. We what we'll do, get started here. I'll put your first chart in here, which is your ES going back. I don't know. I don't quite understand it, but I'll put it in. I'll put it in here so you can take the folks through what you want to look at. So fire away.
Sure. On this first chart, Larry, this is kind of the same exact frame that got me thinking in the highs when I was on your show here about 3 weeks ago, and it's gotten even more extended. And while I love charts, you love charts, I always verify things with a spreadsheet, and we're going to discuss that towards the end here in a few minutes when I talk about this high indicators that my spreadsheet is telling me about. So at any rate, this is a 6 range bar chart. It goes back. It's a pretty nice looking thing. I mean, the thing nails the 1800 bottom, and then seems to be rolling over in real time now. But it's the next one that goes a little bit more granular. And let's see, that one is a weekly. It's a shorter linear regression frame that's got a blue volume line overlaid on it.
What does that mean? What does that blue volume line mean, Bill?
Well, I developed a way to render volume on all of our charts that instead of putting it on a histogram at the bottom, it lays it on top of the price bars, and we're thus able to get a much clearer picture of when the tops and bottoms, highs, lows, overbought, oversold areas are, and thus you can pretty well see that this blue volume line tracks the swings in the index pretty well. And it's in the overbought area now, even as we're on a downtrend or facing a downtrending line above the highs. So these are all kind of evidence, if you will.
Okay.
And then the next chart is number 3. That is also a weekly, but it's blown out a little bit, and it shows the red and white volume line. Again, that's so key to our analysis. It's just overhanging price by quite a bit. Now, as you know, in these markets, particularly futures, why they can be pushed around, anytime somebody has got enough money to do so, but whether it's intraday, daily, or whatever. So, there are no guarantees in this, but, I'm trying to throw out a picture here that this would be a better time to sell in this area than certainly to buy. The next chart, actually, that's the spreadsheet table. That's slide number 4.
You're going to have to explain this one to me, partner.
Yeah, well, it's. Let me tell you a quick little story here. About me and spreadsheets. When I first got out of college, I worked for a big bank in Detroit as operations researcher, and so I would go around all the departments and try to figure out how they could save money or whatever. So they gave me an assignment to figure out how much it cost them to process a check, and I came back after a couple of months of study just on spreadsheets. We had calculators back then, for goodness sakes. And, it came out somewhere around 11 or 13 cents a piece, to process a check. And they were just shocked. They had no idea it cost that much. They were thinking down like pennies, the upshot of that was within months later, they were the first bank in Detroit to introduce MasterCard all over the place. So, at any rate, it's I've never lost my affinity for spreadsheets. And when I was on March 23rd, 22nd, 23rd area, I also was looking at elevated charts at the time, but I had completed this analysis, which essentially just enables me to nail the highs and the lows. This is just the high portion, and what it's showing is there's only 2 times in the past year that these magenta highs relationships have occurred between the ES pivot and this tracking index that I've developed. One is on November 3rd and 4th of 2015, at what I call the momentum high in the market, and then lately here in the past week or 10 days, it's occurred on 4 different days. So I take that as pretty significant confirmation.
Bill, we're going to be coming up to a break pretty soon, so I would like for you to stay with us because you've sent another chart along that looks real interesting that shows a 3 drive to a top pattern along with your channel lines, and it looks like Bollinger Bands. I'd like to discuss that one a little bit later too. That was the one that you just furnished with me. In fact, I could put that in and we'll start to talk about it, but when you hear the music, you'll know that it's time to pay some bills. So if you would be so... Oh, here we got to pay bills now. We'll see you in a few minutes, Bill. Hang in there, please.
Okay.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we have Bill Koval of WD Analytics. And Bill, we're looking at your chart showing these trading bands that you want to go through and tell us what you're looking at here, please.
Sure, Larry. This is simply a shorter frame, a 4.5 range bar ES as opposed to the 6, which was slide number 1 with the dark background and the white line. And it's a little easier to understand what's going on when you're not looking at at the whole thing. And as far as the three drive to a top pattern, why you're the expert on that, and I didn't realize that that was contained there, but it's kind of a neat thing to know. What it shows me is it's struggling, particularly with regard to that maroon main line. It's kind of lost it here a few days ago, and then popped it back above. No guarantees on where it goes now, but the evidence seems to indicate that lower is probably the easiest way for it to move at the present time. Mm-hmm. And indeed, you are right. Bollinger Bands, just one of the things I've got on here. I like to look at channels and excursions and support and resistance. It helps to identify where the turns are coming. I use a bunch of others as well. And one thing about this chart, which I'll do, you've been so nice to me that I never usually reveal what these lines are, but for any of your listeners who want to sign up for free, copy of my email, later I'll actually email not only this chart, but I'm going to identify some, not all the lines, and the exact setups for the lines too. That way they can try to duplicate these things at home.
Okay, that's good. Well, I've posted into the room how they can reach you at info@wdanalytics.com for a free copy of these slides and newsletters, so I'm sure they'll be able to do that. Is there anything you'd like to leave us with before we wrap it up?
Well, just back on that spreadsheet again. Quite simply, those topping patterns shown with the magenta, where the ES pivot is above my index high tracker. Those are significant. They happened only these two times in a year, and they happen to correspond with the charts. And to me, that's pretty good evidence that we might have some down work in front of us. So, that pretty much sums it up.
Listen, I want to thank you for being our guest, and whenever you feel like you have something that you want to share with us, or in probably another few weeks, we'll have you back on as a guest. But I always like to hear from you because the quality of your work has certainly held up through the past. You were certainly talking about that big bottom that happened down there, and you should have a hats off and a lucky rabbit's foot to you, because that certainly was a really good one.
Yeah, well, thank you, Larry. Listen, I appreciate it, and you have a good day.
Okay, thank you very much. That was Bill Koval of WD Analytics out of Scottsdale, Arizona. So we'll move on here. We were talking about the gold market and the oil market and all these markets that are moving around. The crude oil is the one that is completing the ABCD pattern. We also had an ABCD pattern complete on the gold down at the around that 12.25 level last night, and so far we've been able to rally $8 off of that bottom. So we'll keep an eye on gold. I think we should, being a Friday, we're going to wait. Let's look at what happens over the weekend, because we had that explosive move in the gold stocks, which is really an aberration of some kind. To see everything move all at the same time is really, very, very unusual. My good friend Byron Tucker, we were discussing some things last night, and his wife happens to be one of the big folks on in what they call it, fund of funds in New York. And one of the things that's happening over there is that the CalPERS, which is the big retirement of California that takes all of the public money, they are going away from hedge fund managers, and they're going to do it themselves through ETFs. Boy, I want to wish them the best of luck. But that's really, if that's a sign of that's happening, and supposedly it's happening in New York also, that means that these non-professionals are coming. That's not to say that professionals don't do it right very often, but when someone that really doesn't understand what these financials are about gets into it, you've got to be really really careful to watch it. So keep an eye on that, because that could be a real game changer. Because if these people get in, they have a tendency to not do the necessary things that that people do, like recognize when they're wrong. And that's the real key to these things. Everybody can stumble across and pick an acorn out of the thing to feed themselves, but frankly, it's when you're wrong is when you decide that you have to stand aside. And that's the main thing that you want to watch, in my opinion. So we'll watch this very, very closely, but we do have some real serious stuff going on here in the markets as far as timing coming in, and we'll see. Now, this has nothing to do with the astro part of it. This is all to do with the geometric part of it, and that's the key to what we're really watching in these things. We've had a request from our good friend Danny out of Atlanta to take a look at the Japanese yen, and we're going to do that right now. We're going to look at it on a long-term weekly basis, because we have come down almost to the exact 382 retracement. This would be the second 382 retracement that we've had here in the Japanese yen over a period of about 7 years. It's also coming in right at a 20-man line, and that came in at the 107 and change level. We're now trading above 109, so there's a possibility that that's already been hit, and this could be turning to see what's going on. Now, the Nikkei has been up 6.5% this week. So if you want to extrapolate that, if it can do 6% a week, for the rest of this year, this is going to be one heck of a bull market. But again, this could just be an outlier event also. So you just want to see what happens. The Hang Seng index went up and made a 61% retracement of the high that we made late in the year before we had the big drop in the in the Hang Seng, so that's nothing more than a 61% retracement. The same thing is true with the German DAX. It was also making that same type of retracement, so we'll watch this. As far as the S&P, what we've been watching here, we'll get up and take a look at this here, is the longer term here. One second, I'll put up the 4-hour chart on the S&P after we have our break. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're taking a look now at the E-mini S&P. As you can see, this is a 4-hour chart, but it does show the 3 drive to a top pattern that we just saw with Bill Koval's WD Analytics chart, and it has very nice symmetry from high to high. And again, we have a longer term cycle coming in here, potentially with the move that we're having right now in the longer term things with the New York Stock Exchange Index, which has not taken out the 61% retracement of the high from May 19th. Now that sets up a perfect symmetrical pattern, much like we did in 2007. If we broke, if you remember 2007, we came down into August 15th. That's when I first started working with Tom O'Brien, and I was a guest on Ed Young's show. And then after Ed passed away, I was fortunate enough to, pick up his show, which is pretty hard to follow his steps. That was a first-class dude in every respect. But we bottomed on August the 15th. On that particular day, Tom O'Brien and I were talking. The Dow was down 350 points on that day, and the small caps was actually up on the day. We went up into October 7th, making a higher high by just a little bit. And that's when Bill Ehrman yelled and screamed. He said, "I'm seeing a 10. And the market should start down now." And he let me know that we're looking at a 10 now. So just keep that in mind. It's only a probability. And we also have Norm Winsky telling us that this is something really serious in here. So we want to listen to Norm. The dude's been 5 for 5. And also we have Shane Smolian that also has been talking about this coming in. And we have Bill Meridian talking about April 15th also. So we've got a lot of things going on here that you should pay attention to if you like cycles and Fibonacci numbers and all the other things that we take a look at here. So just watch it, and we'll see what actually happens with some of these things, and we'll see. As far as people keep asking me about the gold, I still think we got to wait. We're down $65 from the high. Let's just wait. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.